Hi, welcome to chapter 8, the budgeting chapter. And so chapter 8 is all about budgeting, which is one of my favorite topics. And so this chapter will lead us through the idea of budgeting in a business, like in a manufacturing environment. So we'll go through basically all of the different budgets that we'll use in a manufacturing environment. And then we will also learn how to do our big project. So we have 2 projects in this class. And the biggest one is one where you're going to do the budget for an entire quarter for a business from start to finish. So it's a good process to learn. It's important. I spend a lot of time talking about budgeting just casually in class. And this is the formal process of how to make it happen. So what is a budget? Let's see. A budget is a financial plan. So I think that sometimes I put like a detailed plan or something like that. A financial plan for, actually, let's change that to a detailed plan. A detailed plan for acquiring and using financial and other resources over a specified period of time. So what we'll do is we'll learn how to get the money and then where we're spending the money. So budgets in general are a means of communicating management's plans throughout the organization. And so the budget is usually created by top financial executives. I'm on the budgeting committee of the university, so I spend a lot of time the process actually starts in November, so it'll be picking up here pretty quickly. And we basically will set the budget for the entire university. So we start with the basic idea of how many people are we going to have as students, and then we're going to decide what we're going to charge them. And then we go and how do we spend the money? And so the university, we're trying to break even. We're not trying to make money as a business because we are a nonprofit and we are just trying to break even. So depending on how much we bring in decides how much money we can spend. So we go through the idea of how many students are we going to have on campus, how many grad students, how many undergrad students, and then based on that, we go ahead and subtract out all of our fixed expenses, like things like the cost of faculty as far as salaries and things like that, and all the other costs involved with the university. And then we have to go through utilities and everything else. And when we get to the bottom line, if that number isn't 0, then we have to find places to cut as far as expenses go to get it to 0. It's never the other way around. We never look at it and we're like, oh, we have all this money, because we never have enough. And so we figure out ways to spend our money more reasonably and estimate properly so that we're able to break even. So budgeting provides a means of allocating resources to their most effective uses. So we have a certain amount of money that we can spend, and where can we spend it to impact student lives the best? So do we want to, if we have the money, can we give our people raises, or should we expand and renovate something in athletics so we can attract more students to be able to continue to exist as an entity? Or do we want to renovate Davis Hall to make it more prestigious and beautiful to bring in more students? And so all the things that we do, we are trying to find ways to grow, and like we're doing fine financially. We are okay because we have a strong endowment, but how do we continue to use our money in the best way possible? Oh, it's quite the experience. So it really is, it's really President's Cabinet. So it's Dr. Carey and all of her President's Cabinet, all the vice presidents, and then me. And so I'm the representative of faculty that helps to, put a critical eye to all the numbers and to keep them on the right track. So it's beautiful. I love it. So this is an example. It's just a picture I found online somewhere of the different budgets that we're going to do. So all of it starts with the sales budget. So if we were looking at the university, we would start with like, how many people are we going to serve? So how many students are we going to have? Based on that, so if we want to look at it from a manufacturing standpoint, since we're a service business, let's look at a manufacturer. So how many bikes are we going to sell? How many bikes do we need to produce? How much material and how much labor and how much overhead will we have? How much selling and admin expenses will we have? And that all leads into a cash budget. Money in, money out. Do we have enough? And that's what we spend most of our time with when we're dealing with the budget of the university. From there, we do a budgeted income statement and a budgeted balance sheet. When we're looking at production, we have an ending inventory budget that shows how many units we're going to have on hand, and that goes into the budgeted balance sheet as well. So these are like the financial statements that we budget, and then we will go on to the next quarter or the next month or the next year and plan it all through again. So fun. So what we're going to do in our notes is I'm going to take you guys through an example of each one of these budgets. And then for homework, you'll do an example of each one of these budgets. And then our project is an example of each one of these budgets. And the project will have one comprehensive case that you'll go through and you'll build all the budgets for. And it's an Excel, and you can connect all the cells. And you guys are actually really good at that already. My traditional students that I teach during the day don't always do their homework in Excel. You guys do. So you'll have a little bit of a leg up because you're ready for it, because you do all of your homework in Excel already. So what we're going to do is we're going to start with our sales budget, and then we'll move into producing and how much are we going to spend on these costs, all rolling into a cash budget. And I'm going to run you through that whole process. So starting off, I'm looking at budgeted sales based on units. And apparently we sell each unit for $10. I have no idea what we're selling. So I should probably make that up when I make up examples, but I didn't. I just said, this is what we're going to sell, and we're going to build a budget for the second quarter of the year. A quarter is a fourth, like a quarter of a dollar. So we are going to be looking at April, May, June. So those 3 months. So we will be looking at April, May, June. I want you to notice that I went ahead and gave you July and August because we need those to be able to plan for June. Because in June, we're going to be gearing up for July and so on. So we'll start with the sales budget, then a production, then direct material, and so on. So with the sales budget, we're going to start with how many units we're going to sell. And so when we look at that, it's already given to us. We're going to sell 20,000 units in April. 50,000 units in May. May's a big month, and June 30. So in the total for the quarter, that's 100,000. Each one of our units sells for $10. So what we will do is have 200,000 of revenue in April. 500,000 in May, 300,000 in June, and 1 million in for the whole quarter, because 200, 500, and 300 added together is $1 million. $1 million. So the next thing I want to look at, and this budget isn't really talked about in that picture, but it's a schedule of expected cash collections. Because just because we sell units doesn't mean we're going to collect all the money that month. If all of our sales are cash sales, then yes. But most of the time, our sales are not cash sales. We make sales on account and we receive the money later. So the question is, when do we receive it? So additional information given, all sales are on account. The company collects 70% in the month of sale, 30% the following month. So if we have $30,000 as beginning accounts receivable, that's back from March's sales. And I don't know what March's sales were, but apparently 30,000 is still waiting to be sold. I guess it would be, I think we only sold 10,000 units because we would have gotten 70% of it in the month of sale back in March, and 30% is what we're still waiting to receive. So that 30,000 is always given because that is accounts receivable from the previous month, and we're receiving that now. In April sales were $200,000. So we're going to receive 70% in the month of sale. So 70% of this money will be collected in the month of sale in April, and the other 30% in May. So what I did was I took the $200,000 and I split it up 70, 30. So then I'm going to look at May sales. May sales are 500,000. So I'll be 70% times, 70% times 500,000 and 30% times 500,000. So the May sales will be collected in May, June. So 30% of 500,000 is 350,000, and then 150,000. This is the total for the quarter. So, and then June sales are going to be collected in June and July. Now I only have a column for June because I'm only planning on the second quarter of the year. So the June sales, 70% are collected in, oops, not 500. June sales are only 300. So 70% are collected in June. So that would be what, 210? So then what we would say is in total for the whole quarter, how much money am I going to receive? Now I want you to notice that June sales are 70% of 300,000 is what we're going to collect in June. In July, we're going to get the other 30%. So what we're still waiting to receive, is 30% of 300,000, which is what, 90? And that is called accounts receivable, money we're still waiting to receive. So that number will be very important to me at the end of the chapter. So whatever we're still waiting to receive is considered accounts receivable. So sometimes it's not 70-30, sometimes it's 50-30-20, and it's over 3 months, not 2. It just depends on how your customers pay. And sometimes your customers never pay. So I thought about writing an example where it was like 50, 30, 20. No, that would be too much. 40, 30, 20, and then 5, and then 5% not collected at all, and have to like do bad debt and stuff. But that just seems too complicated for where we're at in managerial, so I didn't. All right, total here is 410. Total here is 360. I'd like those to be double underlined because that makes me happy. So let's go here and give it a nice double underline. Okay. So just checking something. And then in total here, we should be able to add down, or we should be able to add across, and we should get the same answer. So let's check that. So 30, 140, 60, 350, 150, and 210 is 940. 170, 410, and 360 is 940. So that's the answer in that bottom corner. Double underlined. These numbers should be single underlined if we want to be official. So that's where we're at. So in total, we've got $940,000 that's going to come in this quarter, and then we can figure out what we can spend. So I see I'm not bringing in a lot in April, but I'm bringing in a lot in May and a little less in June. But I see April being kind of a rough month for us potentially because we're only bringing in 170. So the next step, so that now we know how much money we're bringing in. So our next step is how many units do we need to make? Because remember that each unit sells for $10, and we're going to sell 20,000 and then 50 and then 30. And so if you use just-in-time inventory, you just make 20, 50, and 30. But most businesses don't operate in a just-in-time system. So what they're going to do instead is they're going to be like, okay, I need to make some extra to gear up, because I think we could acknowledge that May is going to be a big month for us. Like in May, we're going to sell a lot. And so when I leave work on April 30th, I better have some units ready to go. Because if one of my customers calls me on May 1, because May is my big month, and they're like, hey, I need 5,000 units. We can't say, oh, sorry, it's May 1, we don't have any units. So we need to have some units ready to go, okay? So the company desires to have inventory on hand at the end of each month equal to 20% of the following month's budgeted unit sales. So when we leave work on April 30th, we want to have 20% of those units ready to go, okay? So we want to be ready. So the first thing I think I want to fill in is the fact that in May, I'm going to sell 50,000 units. And in June, I'm going to sell 30,000 units. Now I got that from up here, 20, 50, 30. So that's how many units I'm going to sell, 20, 50, 30. So that's what I'm going to start with. And so I want to have 20% of those ready to go. So that's why I did the April column for you, just so you could kind of see it. So when I leave work on April 30th, I want to have 10,000 units ready to go. So I'm going to sell 20 in April, but I want to have an extra 10 ready. So I'm actually needing to make 30. But when I left work on March 30th, I had some units ready to go, because on March 30th, I was gearing up for April. So I had 4,000 units. Now that was given, but if it wouldn't have been given, I would have been okay, because I would have wanted 20% of April sales. So 20% of the 20,000 would need to be ready to go when I got to work on April 1. So I need to make 26. So we do 20, add 10, minus 4 to get to our 26. So in May, I need to gear up for June. So I like to make shapes sometimes. So in May, I'm getting ready for June. So I would say that I need what, 6,000 extra? So that means in May, I need 56. I need 56, but when I got to work on May 1, I had some units ready to go. Whatever you end with in April is what you begin with in May. Well, we can do it again. So whatever that number is, it comes here. So when I got to work on May 1, I had 10,000 units ready to go. So I only need to make 46,000 in May. So the answer for May is I need to make 46,000 units. So in June, I'm getting ready for July. Now, this quarter column, I'm not getting ready for, because the total for the whole quarter we would acknowledge is what, 100,000? That's how many units I'm gonna sell in the whole quarter. But I don't need 20,000 extra ready to go. I need to get ready for July. So I can put July over here, just like as an example, just kind of over in the margin. Because in July, I'm going to, let's see, where's July? 25,000. So in July, that's why they give that to you, by the way. Me, 25,000 units. So I would want 20% of those ready to go. So it looks like I need an extra 5,000 ready to go because I need to gear up for July. Because in July, I'm going to sell 25. So when I leave work on June 30, I want to have 5 ready. So that means I need 35, but I don't really have to make all 35 because when I left work on May 31, I had 6 ready to go. So in June, I only need to make 29. Okay. Okay. So for the quarter column, when we did the quarter column here, we just added across, things were good. We didn't add this across because we sell units for $10. So it's not like we put 30 here. So you don't always add across, right? Because each unit sells for 10. It's not like for the quarter column, I'm going to do 30. So down here, when I add these across, what I want to know is what was the ending inventory for the quarter and what was the beginning inventory for the quarter. And so this 100-point project you guys are going to do, the main places, I give you check figures on your project, so everybody should get 100%. But one of the places students make mistakes is right here. And I don't want you to get a 98. I want you to get 100. So I want you to pay close attention when you're doing this, because I want to know, what did you end the quarter with? So the quarter ends on June 30th. And so you ended the quarter with 5,000 units. Okay, so you ended the quarter with 5,000 units. You didn't end the quarter with 21,000. So you don't want to add this across. And so then we end up with 105. And then what did you begin the quarter with? You began the quarter with 4. Okay, so this 4 comes from the beginning of the quarter. So 105 minus 4 is 101. And then if we add it up across, we should be fine. Because if we add 26, 46, and 29, it's 101. Now, if you add it across, then this number added across is 21. So if you did 100 plus 21 minus, and then these 3 numbers together are 20, you get 101, but that would mean that these 2 numbers are wrong. And then you'd only get a 98% instead of 100%. And you want 100%. So pay attention to that for me. Okay. So moving on to the next one, now we know how many units we need to produce. So we would tell the people in the production department, all right, in April, I need you to make 26,000 units. So even though we're selling 20, we're going to tell them to make 26 because we got to get ready for May. And in May, we're going to sell 50, but we're going to tell the people in production, I need you to make 46,000 units. And they were like, wait, but we sell 50. They don't know that. They don't care, right? But they're going to say, wait, we sell 50. And I'm like, well, we only need to make 46 because we had a bunch ready to go. And we're getting ready for June. So that's the theory of how that works. Okay, so now we need to know how much material we need to buy. So every unit, remember we sell our units for 10 bucks a piece. Every unit needs 5 pounds of material. I don't know what it is. Sugar? I have no idea. So at the end of every month, we want to have some material on hand, because when we get to work on May 1, we want our workers to start working and making units. And so if they have no sugar on hand, they can't make any units. So we've decided we want to have 10% of the next month's needs on hand of the material. And so at the beginning of the quarter, we had 13,000 pounds of material ready, and every pound of material costs 40 cents. Okay, so there's a lot of given involved, but you just need to kind of work through your process. So, all right, so 26,000, 46,000, this is the number we need to produce. And so you can see this 26 and 46 from here. So this number would be 29, correct? And every unit needs 5 pounds. So this is the number of pounds we need. So 29 times 5 is 145. Okay. And so if we look at the April column to kind of see where things are coming from, 26,000 at 5 is 130, which is fine. This 23,000 is because we're getting ready for the next month. So when we leave work on April 30th, we wanted what, 10% of those ready to go? Sorry, it's because I'm highlighted. Okay, so shapes, arrow, I wanted 10%. So 10% is a number. I usually write 10% on that little line. Like I can't do that right now. There's no way I can figure that out. So we need 130 and 23, which is 153. We had 13,000 pounds ready to go when we got here, which was given. But the other place it could be given is it's 10% of April's needs. So that's where that came from. And then 153 minus 13 is 140. 140 at 40 cents per pound. So if you take 140 times 40 cents a pound, you're going to spend $56,000 on material, right? And so here, this 14.5 is 10% of that. This 23 came, whatever we ended with in April is what we began with in May. So that makes sense. 244 minus 23, 244.5 minus 23. Okay, so this one I need to be getting ready for July. So I would need July off to the side. Can I write over there? No. So what I need to do is I need to insert a column to the right, just so I can write over there. And then I want to make it go to the right so I'll be able to see it because it's kind of running off my page. Okay, so what I need is I need July. And so because I need to get ready for July and I don't know what July is. So I need to kind of come up here and finish out this July because I need the number like the 29. I need that for July. So in July, I'm getting ready for August. Oh, good grief. August is 15,000 units. So 15,000 units is what I would write if I had room to write another column. And then I wanted what, 20% of that? So 20% of 15 is an extra 3, which is 28. But I started July with whatever I ended with in June, which was 5, which gives me 23. Okay, so then I would bring that 23, like I brought the 29 down, I'd bring the 23 down times 5. Man. So 23 times 5 is 115. And so 115, and then I want what, 10% of that? Because like 145 went to 14.5. So this would be 11.5. Okay. Now, I actually gave that to you, but I wanted you to see how I would have gotten it if I would have needed it. So, because you do need to be able to compute that in general. So 145 and 11.5 added together is 156.5. And then whatever we ended with in May is what we begin with in June, which is 14.5. And so 156.5 minus 14.5 is 142. And that number is not in dollars. This number is still in pounds. And then each pound is what, 40 cents, I think. So 142 times 0.4 is 56,800. So that's how much I'm going to spend in dollars in the month of June. Okay, let's do my quarter column. 26 and 46 and 29 is 101. 101 at 5 is 505. And then I began and ended the quarter. I ended the quarter with 11.5. So 505 minus 11.5 is 493.5. And then I began the quarter. Thank you very much. I began the quarter with 13,000. Oh, sorry. Thank you. 13,000. And so remember that this 13,000 comes from this 13,000. And you what? You bought me this, but you want to bite? Okay. So this number comes from this number. All right, so 493.5 minus 13,000 means 480,500. And then I need to take that times 40 cents a pound. So what is that? Oh, it's good. 192.2. Now I'm going to check that 192.2 by adding up these three, because if I add those together, it should be 192.2, and I don't feel like that's right. So let's check it, because I feel like I messed up somewhere. So let's check. 56,000, 88.6, and 56.8. 2014. Okay, so math, they got me somewhere along the way. So 505 is good. Let's check. 505 minus 11.5 is 493.5. Oh, I'm supposed to add here. Boo. When Tor asks why I can't figure something out, he's like, oh, what was it? The adding or the subtracting? So it's 505 plus 11.5, 516.5. 516.5 minus 13,000 is 503.5. So this one should be 503. I was able to catch my mistake because I need to be able to add across and down to make it work. And so 503.5 times 40 cents a pound is 2014. And I think that's what I had before. So I'm going to check it again. So 2014, if I add 56,000 and 88.6 and 56.8, it is 2014. So everything is good there. So now my number is good. Okay. So that is expected cash collection. No, cash paid for inventory. And then I need to do timing of when I'm actually going to pay for it. So when we buy material, we buy it on account and we're going to pay some now and pay some later. So looking at that, I went ahead and did this for us, but the balance in accounts payable on March 31 is 12,000. And then I'm going to take this 56,000 and I'm going to pay half in the month of purchase and half the following month. Ooh, is that a cookie? Oh, no, I'm fine. This is okay. Yes, you can cook them. Thought it was a cookie too. Okay, so 12, I'm going to take the 56 and I'm going to split it 50, 50. So it says half of the month's purchases are paid in the month of purchase. The other half is paid in the following month. So 50, 50. In May, we're going to purchase 88.6. So I'm going to do 50, 50. So 50% times 88.6 and 50% times 88.6. So half of 88.6, I should have put them colored and I didn't. 44.3 and 44.3. June's purchases are 56.8. So 50% times 56,800. So 56,800 times 0.5 is 28.4. So in total, I've got 44.3 and 44.3 and 28.4. Now, I don't have a room to put it anywhere, but I want you to notice, so I'm going to actually give myself a row here. And the money I will have to pay later is the other half I owe on June 30. Because I paid 50%, so it will be 50% times 56,800, which is 28,400. Okay, so when I pay later, that means accounts payable. Okay, so accounts payable is going to be 28,400. So I'll need that number later. Okay, So 28,000, 44,300, so 72,300 right here. And then 44,300 and 28,400 is 72,700. I should be able to add down or across 40,000, 72,300 and 72,700, 185,000. So this is what I'm going to pay for materials. My materials that I'm going to pay. I'm going to check down as well. 12, 28, 28, 44,3, 44,3, and 28,4, 185. All right. So we'll pick up with our labor budget in the next video.